Diga.
Alright, but today is the 21st of April, being a Tuesday, and in relation to the economic calendar, we had high impact news at 8:30 and high impact news at 10. Now, this is low-key my second time recording this because the first time I remembered halfway through that my mic was off. So, yeah, this is the second time doing this. So, we're just going to take a look at the one execution that I took during the AM session. And as per usual, we're going to start at the higher time frames. But initially, I did do was look at the pre-session outlook. So that's what we're going to do right now. So taking a look at the daily, there wasn't really anything that I was paying attention to on the daily, other than the fact that we had a cracking correlation with the previous week high. And we had an institutional round figure level being 27,000 and 27,250, as well as the fact that we have the TGIF from the previous week's trading. So that is all I was paying attention to. There wasn't really much, but because right now price action is at all-time highs, it means that as we begin to continue creating all-time highs, if we are to continue creating all-time highs, but if we are to continue creating all-time highs, it means that there's nothing on the left side of the chart for us to refer back to. And in instances like this, it means there's no type of drawn liquidity that we can look to say, oh, we want to trade towards here. All there would be the previous day high. And once that is breached, there is nothing. And what we then look to utilize is one, standard deviations, and we pair our standard deviations with institutional round figure levels. So these would be levels such as 27,000, 27,250, 27,500, 27,750, so on and so forth. So that would be in reference to the institutional levels. And then in relation to the daily, lastly, the other thing I was paying attention to was the TGIF, which was unfulfilled from last week's trading. So we end up having the Friday candle that resides right here. We don't return back into this week's range. TGIF has not been fulfilled. And just because it's a new week doesn't mean that we completely forget about what has occurred from last week, what has not been fulfilled from last week's trading. We don't completely negate all of what has happened or occurred during the previous week's trading. They still hold importance. And in relation to the TGIF, within it are two PD arrays. So we have this imbalance, and then we also have this imbalance on the left side of the curve, which was utilized as resistance for this move down towards sell side. So that's it in relation to the daily. And then when we take a look at the hour 4, there was absolutely nothing that I was paying attention to in relation to the hour 4, other than the fact that, okay, we have this previous week high, which a cracking correlation served that, as well as the fact that, okay, our week opened, we gapped down and we opened inside of this hour 4 imbalance, but this imbalance is still being utilized in an efficient manner. So we open below the consequent encroachment. So we open in a discount in relation to this imbalance's range, but we close basically above it. So we close back above the consequent encroachment, and I can't tell, but it looks like we close above this imbalance. And then we end up seeing the consequent encroachment using the naked eye. So would come in around here. Consequent encroachment is being respected. So the imbalance is still holding its principles in terms of what we'd look to see a bullish imbalance be utilized for. But taking a look at the hour 1, very zoomed out, because I generally like to have the monthly opening included, and this is, we've had a lot of expansion. So from all the way from 23,500, we're currently sitting at like 26,800. I'm not quite sure, but yeah, a lot of range. So taking a look at it a lot closer, what I was paying attention to was these series of up close candles that reside right here, because we have a cracking correlation with the previous week high. I was paying attention to whether we were going to have a change in stay in delivery occur right here, so the formation of an order block, because we had the 9 a.m. candle currently delivering down towards sell side, looking to engage with that London low as well as that Asia low that resides right here. And then the 15-minute also very zoomed out. I like to have the previous week's range. Taking a look at it a lot closer, what we end up having, that cracking correlation with the previous week's high. from that cracking correlation, we end up having this deliverance down towards sell side. So we end up engaging with this imbalance that resides right here, and it ignites that sell side delivery motion to trade towards the London and the Asia low that reside right here. I had a standard deviation projected out in price. So from this high all the way down to this low, -2, -2.5, projecting for a regular trading hour gap high from the Thursday, Friday regular trading hour gap, and then we have the -4, -4.5 projecting for its consequent encroachment, which would also be the New York AM low of day from Monday's trading. And another thing as well is the fact that I actually utilized a body standard deviation in order to take the long position that I took today. So we don't actually have a change in staying delivery right here. Wow, this is annoying. We don't actually have a change in staying delivery right here. So we have a series of up close candles, series of down close candles, but we don't end up closing below these series of down close candles during this candle right here. And we end up seeing the next candle delivering down towards sell side, breaching this low, and then turning all the way back up. This isn't an indecisive candle where we can completely ignore this candle. This is a reversal candle. The candle opens, delivers sell side, engages with a form of sell side, and then we close back above the opening, and the top wick is smaller than the body itself. So we can't deem this an indecisive candle. So we can't ignore this candle altogether. But what we end up having is price action utilizing this imbalance right here for that sell side delivery motion. So that is quite literally it for the time frames. In relation to the notes that I said, would be high time frame institutional order flow is bullish, but cracking correlation presented on the daily above the -3.5 standard deviation level. So naked eye -3.5 resides right here, cracking correlation, and that is what I was referring to. No clear high time frame drawn liquidity as price action breached all-time highs, but it would be 27,000 if buy side is to be delivered, and TGIF from the previous week if sell side was to be delivered. So TGIF residing right here and 27,000 residing right here as well. And then no higher time frame PD array was engaged with, so no hour 4 PD array was engaged with, and there was no daily PD array that was engaged with. Intraday order flow was consolidating, but cracking correlation presented itself with the previous week high, and M15 order block and SIBI utilized for sell side delivery towards London. So what I was referring to would have simply just been these series of up close candles. I thought that we closed underneath it, but upon further inspection, after I finished journaling, I found out that this wasn't a closure, and that's what led me to utilizing a body standard deviation, which we will get into. There was no clear intraday drawn liquidity. Price action was just gravitating towards London and Asia, as well as the TLP from previous day's deliverance towards buy side, and that New York lunch low was still intact. So London, Asia, TLP from previous day's trading, lunch low still intact. So that's what I was observing. And then consolidation on the hour 1, 8:30 and 10 a.m. high impact news. So taking a look at the live markets right now in relation to what we've done, which isn't actually much. Right now, the candle is currently indecisive, but there's still a long time for this day. But nothing much on the hour 4 other than the fact that, okay, we have a whipsaw candle that has, occurred right here. The opening of 10 a.m. is in alignment with the opening of the 6 a.m. candle. This is a signature of consolidation, which will be evident when we drop down into the lower time frames. But taking a look at the hour 1, what we end up having is we end up seeing a failure to change the stay in delivery. And what we're actually seeing right here is a reverse fractal. So I say reverse fractal because a fractal can be framed in one of two ways. I've explained this in one of my analysis videos, but it's essentially like we're paying attention to concentric circles. So I'm just briefly going to try and do this quickly. We're paying attention to concentric circles, and each circle within is a time frame. So the very center circle will deem that the lowest time frame, and then it goes out the time frame above it, out again the time frame above that, out again the time frame above that. So what we're looking to see is that the signatures that occur on the lower time frames, we want to see them roll out towards the higher time frames as well. But it also works in the opposite fashion as well. The signatures that we're seeing on the daily time frames, the structure that we're seeing on the daily time frames? On the higher time frames, the signatures and structures we're seeing on the higher time frames are also going to be present on the lower time frames as well. So that is essentially it when I'm talking about the fractals. But when I say we're seeing a fractal occurring here, is because this 9 a.m. candle is the exact same as this 15-minute candle that we were paying attention to right here on the 1815. And it's the exact same premise as well. A failure to change the stay in delivery, deliverance down, engaging with sell side, and then the next candle snapping back down. We're taking a look at the hour one. Failure to change the stay in delivery, failure to have that formation of an order block, but this candle snaps down, engaging with sell side, and then closes as a reversal candle. It's not an indecisive candle, but in relation to the hour one, there's nothing much that has occurred right now. But jumping down to the 15-minute, we can see price action this is where a lot of the framework came from. So we have the wick standard deviation being red, as we know, projecting for regular trading hour high, consequent encroachment of that regular trading hour gap. And then I look to utilize the body standard deviation. So the bodies of these two up close candles, because this would still be deemed a manipulation leg. Bodies of the up close candles, I want to get a more fractalized, a more precise standard deviation. And if we zoom in very closely, this is what I observed after I done the journaling. We didn't change the stay in delivery. It's very shallow. It's quite literally just one tick, but one tick is more than enough to invalidate or validate an idea, because we are operating under the premise that these markets are run under an algorithm, and algorithms are very precise. An algorithm is designed to be precise. It doesn't make mistakes. Whatever it does, it's simply not random. It's all precise. It's all structured in a sense. It's following principles. To further elaborate on that point, if we are looking to locate a point of inception at sell side for that buy side delivery motion, so we have a pool of sell side that we're looking for a point of inception to occur at. What is more than sufficient enough for that point of inception to occur is quite literally a one tick engagement. One tick engagement is more than sufficient for us to then see a point of inception if the signatures end up unraveling out. So the signatures I'm referring to would simply be, okay, we have that deliverance, engineer sell side just under it. Doesn't always have to, but in this case, we engineer sell side just above this pool of sell side, return back into an imbalance that resides right here, deliverance down, breaching this sell side as well as breaching this pool of sell side, one tick engagement, change in stay in delivery, as well as the inversion of an imbalance that was utilized right here for then price action to utilize it as support for that bullish motion to unravel. We don't have to see price action really dig deep under that pool of sell side. One tick is more than sufficient enough, as well as the signatures unraveling out right after as well. Yeah, we don't have that order block formation right here, but simply just look to utilize the body standard deviation, and that is where we ended up having the change in the point of inception for that buy side delivery motion that I ended up taking during the AM session. So taking a look at the trade, we have price action, point of inception, engagement with the previous week high residing right here, change in stay in delivery. I don't actually have a standard deviation here because I know it's most definitely exhausted, but we have price action delivering down -4, -4.5, returning back up, and then you can utilize a leg that resides right here again. And then we have our -2, -2.5, -4, -4.5, where we end up seeing price action collapsing. -2, -2.5, you can look to anchor another standard deviation. So it'd probably be, not probably, it would be from this leg right here. And that's where we end up seeing the point of inception. But I didn't have any of those right there. I was simply just paying attention to the M15 because they're all going to overlap with each other. When we're anchoring a standard deviation to the correct legs, it's inevitable that they're going to overlap with each other because it's in alignment with the algorithm. I've said this multiple times, standard deviations speak the language of the algorithm, because a standard deviation, we're using the Fibonacci tool, and Fibonacci itself is mathematical. Algorithms are mathematical, but actually jumping into the trade. So what we take a notice to, we have 930 opening right here. 930 opens, delivers up towards buy side, clearing all of this buy side, but leaves all of this buy side. All of this right here, TLP. All of this right here is a TLP, and price action leaves it. And we instantaneously deliver down towards sell side, and we have the inversion of the Monday first presented AM for value gap, and we utilize that as resistance, and then we continue that sell side delivery motion. This segment of price action right here resides inside of our M15 standard deviation, the body standard deviation. So if I'm to grab this M15 body standard deviation, all of this price action right here resides inside of it. So we have that deliverance down towards sell side, and then we end up seeing price action end up slipping into a phase of time distortion. What is happening here? We're waiting for our 30-minute window for price action to then delivering up towards buy side. And a lot of things actually happen in this segment of price action. A point of inception was established before our key time window. It was established before our key time window. And I mentioned this in one of the analysis videos that this can occur. We can end up seeing a point of inception occur before a 30-minute window. And when this happens, two things may occur. The 30-minute window is going to be utilized for expansion, or the 30-minute window is going to return back to the point of inception that established before that 30-minute window to then continue that deliverance in that direction. So we end up seeing 945 returning back into this change in sustained delivery. It's returning back into this point of inception that occurred before 945, and then we end up having that buy side delivery motion. So we have 930. Very aggressive price action. This is tripping people into looking to take shorts. Retail is looking at all of this like resistance. Oh, the wicks are being left intact. Resistance. I don't know the logic, to be quite honest, but they're looking at it as if it's resistance, and then 930 immediately, right off the jump, smacks right down. But what 930 is really doing is looking to come and fill our previous settlement. So the previous settlement closing from Monday's trading, that is where 930 is looking to deliver towards, and that's what we end up seeing. Price action delivers down to our previous settlement, and then we end up seeing how the bodies are being very respective of our previous settlements, as well as the wicks are just snapping back down, closing back above it, snapping down, closing back above it, and we end up having price action forming a cracking correlation right here inside of that 15-minute -4, -4.5 standard deviation. And I did want to see maybe price action come down and engage with the consequent encroachment of our new week opening gap, which also resided inside of our -4, -4.5, but that did not occur. We ended up having a change in sustained delivery that resided right here, and I simply looked to execute once we traded back down into it. So once we traded back down into it, I executed on the idea with my stop loss being at this low, and a 5-second change in sustained delivery, because I would have taken a 15-second entry, but a 15-second didn't change the sustained delivery, and that was also a warning sign for me to not be surprised with the type of deliverance we have here. There's two reasons. For one, this is a low resistance move down towards sell side. We know that where low resistance prints, high resistance will print over. Where high resistance prints, low resistance will print over, as we're seeing right now on the right side of the curve. So we failed to have that 15-second change in sustained delivery, and let me even just go down and show. So cracking correlation resided right here. I'm looking for a series of down close candles. I want to see a series of up close candles or the inversion of this gap right here. We failed to do that. 5-second does offer something, which is where this leg is derived from, but I wasn't actually paying attention to the 5-second. I wasn't paying attention to the 5-second. I only seen it after the M1 change in sustained delivery, and that's when I executed and then looked to utilize the 5-second change in sustained delivery. And once again, it's simply just being fractalized. What we end up taking notice to is the 5-second change in sustained delivery, -2, -2.5. This is where we have the reaccumulation of orders for the M1 at our key time window. We have the reaccumulation of orders at our key time window right here, come back into our change in sustained delivery, deliverance back up. This now becomes also a propulsion block. So we have two propulsion blocks. So we have right here being a propulsion block, and then we also have right here being a propulsion block as well, because this candle delivered into this order block and this candle delivered into this propulsion block / order block. They're basically all the same, to be quite honest. But yeah, we have 945 delivering back into that change in sustained delivery, and then we have that deliverance up towards buy side. And I'm taking acknowledgement to the type of deliverance price action is having, and this deliverance is actually very nice. I mean, I know we have a cracking, I'm getting carried away. It's really none of my business. The deliverance with the change in sustained delivery again at our 945 mark. And after that, we end up having the inversion of the first presented AM for value gap. And this is what I like to see during this deliverance up. I want to see signatures continue to unravel themselves in my desired direction. If I'm seeing a lack of these signatures presenting themselves, it may be that I am offside and I have to manage my trade in a different manner, either collapse the trade or accept the loss that may end up coming. Because right here, I enter right here, we failed to inverse the first presented of the AM session for Tuesday. And then we return back down, change in stay in delivery, 9:45, next candle. When we come back and engage with the first presented, we completely displace right through it, formation of an imbalance, and then we utilize it again. We see the return back down. Candles are being very respective of the first presented AM. We're not seeing closure outside of it. Yes, we're seeing closure below the consequent encroachments, but we have to take acknowledgement to what type of conditions are we trading in. We're trading in high resistance conditions. We know that low resistance literally just printed on the left side of the curve at the 9:30 opening. So we have the engagement with the first presentation again, and then we have that deliverance up towards the buy side. Now, where I was looking to target was the new week opening gap high. So it says NDOG here, but it's the new week opening gap high. And that was where I was looking to collapse my trade altogether. But ES was a lot stronger than NASDAQ was. So there was a cracking correlation that presented itself just right here. So cracking correlation presented itself here. And the only reason why I didn't look to collapse the trade was simply because that NASDAQ engaged with this high the same time ES engaged with this high, and the manner in which the engagement with this high was very aggressive, and where price action was being delivered from was rather algorithmic in a sense that we've been following this price action from here. So cracking correlation presented itself here, and at this point my stop loss is right here. I'm observing how price action is delivering. I'm being very attentive in terms of, okay, I know we have high impact news at 10, as well as the fact that I also want to know if the hour 1 is going to present a change in stay in delivery. I wanted to know if this 9 a.m. candle was going to close below the open of the hour 1 that resides right here. So I ended up collapsing the trade at our true day opening. Reason why being is because we ended up having a cracking correlation with this high right here, as well as the fact that this is an algorithmic level. I was already content with the trade, as well as the fact that this was a very high resistance deliverance. I knew that it's ahead of our 10 a.m. opening. If we are to end up unraveling with that sell side delivery motion, price action is going to completely just turn right back around on me in a very fast manner, just like this. Essentially just spool towards one side, not offering any up close candles, just like this deliverance, because this is high resistance. Where high resistance prints, low resistance will print. Where low resistance prints, high resistance will print. That is an ungiven. That is deterministic. There is no if, buts, or maybes to such a principle. But yeah, that is essentially it for the execution. Right now we're taking a look at price action. Very nice deliverance down towards sell side. I'm curious to see if we end up seeing that. We also have a cracking correlation that resides right here at this high, clean change in stay in delivery that resides right here. So very nice price action. We end up having a time distortion occurring right here. So all of this consolidation, it's not just consolidating, because something has occurred right here. We have a change in stay in delivery that followed just after our 30-minute mark. So 30-minute mark ends right here, but then just a few minutes later we have that change in stay in delivery. So a motion has been set into play, and then we end up having the distortion of time. What time are we waiting for? 9:45, 10:45, and that's when we end up seeing this nice low resistance run down towards sell side. If we were in this trade at this segment right here and we're observing this price action that resides right here, we know that this is time distortion. We ask ourselves, where are we doing this? And when are we doing this? Okay, where we're doing this is currently at the NWOG high. We can see the NWOG high resides here. Consolidation of orders is occurring right there. And then when we are doing this is at a time where we're not looking for expansion to occur at. So let's weather out this storm that is occurring right here and wait for our 10:45 mark in order to see that expansion occurring. Quite literally 10:45, engagement with this low, engagement with this low, initiating that sell side delivery motion. But yeah, that is quite literally it for the trade analysis.